Like every young kid, I was dreaming of buying a Ferrari to impress girls one day. However, unlike every young kid, I was weirdo enough to actually plan to buy one. And I had an opportunity to do so. I mean, for real. We're talking about a second-hand Modena here, the cheapest and most widespread model in a line. But a Ferrari is still a Ferrari. Who cares about the model? Girls certainly don't. So check out the mastermind plan of a 20-year-old who had just 1 month of real-world work experience during college summer vacation, bought a jacket for his first salary, and decided that he will never give the whole month of his life for a damn jacket ever again. Step 1. Sell an old apartment in the middle of nowhere that for some unknown economic reason costs a little more than an island in the Pacific at the moment. Step 2. Double the money in a stock market. Step 3. Buy a new shiny apartment in a city center. Step 4. Double the money in a stock market. Step 5. Buy a second-hand Ferrari. Step 6. Double the money in a stock market. Step 7. Live off dividends, chase goals, never work again. Believe it or not, a decade later I still think it was a good plan. After all, I'm allergic to work. I couldn't really come up with any other kind of plan. But suddenly something just went wrong for absolutely no reason at step number 2. In late 2010, at the age of 22, I finally finished college and got the keys to the apartment that my grandpa willed to me from my parents. I became a grown man. And that grown man really had the audacity to sell his apartment for $180,000 to put $150,000 into the stock market, leaving only $30,000 in cash. Yes, I was following the plan precisely. So, what in the world makes you think I wasn't crazy enough to actually buy a Ferrari? Feeling of disappointment and humiliation after realizing that one relatively good jacket costs 1 month of human life left me no choice. I realized that I have an allergy to work and I can't follow a casual career path. I needed my own path. My initial capital quickly turned into $200,000 despite the fact I wasn't working anywhere and had to cover my current expenses from that cash. I also managed to lose $10,000 by buying an unprofitable hair salon and selling it 4 months later. I thought it was a huge mistake with the salon and decided to reward myself for recovering the losses so quickly by having a vacation in March 2011. Which later changed my life forever, but that's another story. Well, I was wrong. A huge mistake was still coming. I discovered the stock market in 2009, already after the crash of 2008. In 2010, before putting everything on the line, I was already considering myself a seasoned trader. I remember experienced traders always kept repeating the phrase, never confuse a bullish market with your own genius. Oh boy, how that phrase was pissing me off. You may probably think I was just an idiot who had no idea what the bullish market even was. Not at all. In fact, I was good. I haven't performed a single losing trade for the first year of trading or so. I almost never used short sales. Short sales didn't make any sense to me on a bullish market. I was just buying stocks at every small correction to sell them higher and immediately reinvest in stocks that haven't grown yet. Classic trading strategy that still works till this day, but requires a lot of patience and tons of free cash to live off. What was pissing me off was the fact I was young and physically couldn't compensate for my lack of experience at the bear market. There simply was no bear market for me to demonstrate my skill and prove someone on the internet was so wrong about me. I couldn't go back in time. I also missed lots of opportunities to double the money in 2009 when everything was growing like crazy, but I was only learning how to trade stocks on my frugal student scholarship and didn't have any significant capital. Comments of people with a 10 years trading experience suggesting it's not me that good, it's just market conditions, were like a spit to the face to me. I considered it especially hypocritical from people who doubled, tripled and quadrupled their capitals in the early 2009 and were waiting for a big market correction. They had their chance. They used it. Good for them. But now it's my time to use mine. How dare they question my ability to outperform the market just because I didn't have an opportunity to catch a big market correction and buy stocks cheap like them? That's what I thought. An opportunity was all I wanted. And an opportunity was what I got. It was September of 2011. I successfully predicted the correction, sold stocks high, and was ready to buy more with a 15% discount. And so I did. Everything was great. In March I met my future wife Anne on vacation in Thailand. Market was kinda flat in the first half of the year, so I wasn't able to make any significant amount of money from trading. It was barely covering my expenses, mostly pizza and sushi delivery at the time. In the summer, I invited Anne to visit Moscow for the first time, so my cash was steep. Long story short, by the end of summer, I was desperately looking for an iron opportunity to make some quick buck on the market and come back to Thailand to stay with her longer. So a 15% market correction was my golden opportunity. I was literally already looking for a plane ticket. I also calculated and planned future expenses for a long and fancy trip. I came to a conclusion that catching at least $20,000 of profit before taxes would be nice, and I wanted to do it quickly, so it was about 10% of my deposit at the moment. Normally, you need to wait about 1 month to safely catch a 10% growth of the market, but I didn't want to wait for the whole month. I decided to go all in and take some margin. If you triple your trading position, you need only 3% growth to earn the same amount of profit. 3% is basically an equivalent of 1 growing day on the market. After all, what could possibly go wrong with buying stocks at the local bottom right at the end of the correction? So I bought over $500,000 worth of Russian stocks with less than $200,000 deposit, using mostly brokers' money. I placed my bet on only 2 stocks, Gazprom and Sberbank, biggest Russian gas and banking companies respectively. Realizing that I can operate $500,000 in 1 day struck me after pressing the buy button. It was a funny feeling, I will tell you. I remember feeling mighty and scared at the same time. I was scared by the sheer amount of money involved, not by the risks of my market position, to be honest. That evening I looked at my just opened $500,000 position and turned off the terminal. Next week I should have woken up in Thailand with my girlfriend sleeping on my shoulder. But that never happened, because I was about to learn something you can't teach. You see, I was never the type of a trader who wakes up every day 1 hour before the market opens to look at the news and plan trades. It just didn't make any sense to me because I always plan everything in advance at the moment I open my positions. My only concern was to manually take $20,000 of profit and cash out. So I normally wake up and look at the quotes in the afternoon. Next morning I woke up at 12 as usual. Little did I know, the market has already plummeted. I looked at my losses and was shocked. Current value of my stocks has fallen 5%, creating a $30,000 hole in my deposit. That was much more than I expected to make with the whole operation. It was just wrong. I looked at the price once again, calculated that it went down more than 20% from the highest point of last month, calmed down and decided to wait. I was 100% sure that this was just a smart move by the market maker to steal hard-earned money from weak-minded folks. I've seen it before and I wasn't weak-minded. I had the nerve to sell and invest my only housing, so I had the nerve to stand against the market. Next day I woke up before the market opened. First time in months. To be honest, I was nervous. Market has opened and... For the whole day I was looking at the prices plummeting deeper and deeper without even anything remotely looking like a rebound. The day has ended. I was still sitting and looking at the terminal. The terminal was all red. I was looking at a potential loss of $70,000. It struck me that for just $60,000 I could have already bought a second-hand Ferrari Modena. Like, for real. Did I just lose a freaking Ferrari in 2 days by doing absolutely nothing? It was all wrong, like a bad dream. I needed to wake up and make a decision. What will I do if the market keeps going down? Should I wait for an embarrassment of a margin call? I still didn't know how to tell Anne that I'll probably cancel the trip to Thailand, so I didn't. I looked in my mom's eyes instead and told her what was going on. Mom was shocked, and that was it. I promised to her that I will not, under any circumstances, lose my housing. So I determined a stop loss. The prices for apartments in my area were still ridiculously high at the moment. A $100,000 could buy you roughly 30 square meters of something in the middle of nowhere that would be still under construction for the next 2 years. Next day I woke up before the market opened. It opened, plummeted. I looked at my $100,000 deposit on a screen. I sold. Shocked, stunned, but without questions. What was left was not mine to lose. No margin call ever happened. That was my personal inner margin call, my risk tolerance limit, which I didn't even know existed. That was a lesson no Harvard Business School can ever teach, a lesson for almost $100,000. No demo trading, no book, no course, no mentor will ever prepare you for this. You can only pay for it with your own money. It may sound strange, but now I know it's worth every dollar. I've never lost my deposits thanks to that lesson. I've never got a margin call in my entire career as a private trader. I know my personal limit now. I see the limit, I feel the limit. Everyone has a different personal limit, so each trader will pay an individual price for this lesson, sooner or later. You know what's crazy? Prior to this $100,000 loss, I have never fixed a trading loss bigger than $300, including all brokers' commissions. And even that $300 I lost just because some shady small company refused to pay pre-announced dividends, which would be unthinkable on a more established stock market with stronger regulation like NYSE. Imagine my shock moving in less than 3 days from being a trader with merely a perfect streak to a guy who couldn't even understand how he just lost a Ferrari that didn't even belong to him. I considered the initial capital untouchable and never planned to spend it. I didn't accept it as really mine. It came from selling my grandfather's flat, which he willed to me. So it was my grandfather's money in the middle of a complex transaction of becoming my new place to live, not mine to freely dispose of, spend, or especially lose. Completely devastated, I briefly glanced at the market the next day, only to see a strong rebound, which could have saved $50,000 for me if I waited for one more day. But it didn't matter, because I've already learned the lesson. It's not about the money. It's about your ability to leave the emotions out of the door, do what's right, and stop the game before it's too late. I didn't even look at the stock markets for weeks after that. After I finally calmed down and opened the quotes, I realized that holding the positions through the rebound would have convinced me that I was initially right and outsmarted the market maker. But later the market kept falling for several weeks. Holding the position would have ended up with a technical margin call and losing deposit almost entirely. So I found myself in an interesting predicament. $100,000 basically borrowed from my dead ancestors are lost. I have a girlfriend in Thailand who doesn't know yet that I can't visit her. And I'm still allergic to work, with no job experience and any desire to be hired for one piece of clothing per month. Well, to be honest, I'm not really sure if the topic of some old broke trader remembering his trades from the last decade is really interesting to anyone. But no, I'm not broke because of that loss. So if you want to know how I restored my capital back to $200,000 in half a year, 1,000 likes on a video will do.